Hello and welcome. In this video, we will learn what insider trading is. Alright. Now, insider trading is the trading of a company's securities by individuals with access to confidential or material non-public information about the company. Now, what does this mean? Who actually is an insider? A person who is in the company's board or who holds a key managerial position, or a person who has minimum of 10% of the company's equity would be called an insider. Now this insider would have access or would have knowledge of critical information of the company. Now if he uses this information to gain profit by either buying the shares or selling the shares, then it would be called as insider trading. Okay? So insider trading is a practice in which shares of a listed company are traded on the basis of knowledge or information which is not, remember, which is not made public by the company. Okay? Now, there is a common misconception among people regarding insider trading that the practice itself is illegal. Alright? So that is not true. Insider trading can be both legal as well as illegal. Alright? So let me take two examples and explain you the concept of legal and illegal insider trading. Alright? First, we will look at illegal insider trading. Okay? Let us say that the person, Mohan, is a manager of company Z. Alright? There is a company called Z and a person, Mohan, is manager of the company. Now, according to the inside information which is not still made public, he knows that company is in loss. Alright? So according to inside information which is not made public yet, he knows that company is in loss. And he knows that when this is made public, the price of the shares will go down. Mohan knows it. Okay? So what Mohan does is, he informs his friend Ravi about the matter. Alright. Now this Ravi, he may be from the same company itself or he may be someone else outside the company. Okay. He may be working in the same company Z or he may be working somewhere else, entirely not related to Z. But then he has the information which is given by Mohan, who has the insider information. So what Ravi does is, he sells large number of shares that he has. Okay? Ravi has a large number of shares in the company Z, or he has large number of shares of the company Z. And as soon as Mohan informs Ravi that the company is in loss, Ravi sells all his shares, thereby keeping the profit. Okay? Or he may reduce the loss too. Or he may sell the futures too. Alright, there are many things that you can do with this information. So if this happens, then it would be considered as illegal, because Mohan is using an information which is not made public for his or his friend's benefit. Okay, so this is one case. One more case. Let us say that Mohan is manager of a company Z. Alright. Now he knows that the company will be acquiring some other company soon, and as soon as that happens, he knows that the stock prices will go up. Now this information is still not made public, so the public doesn't know. But Mohan knows it. So what Mohan does is, he goes and buys significant amount of shares. And if he does that, then it would be considered as illegal. Now, in both cases, they do not report to SEBI. They do not say to the SEBI that they have used the information and sold their shares. They have used the information and bought the shares. So they do not do that. So SEBI is unaware of these things. And if that is the case, then this would be considered as illegal insider trading. Okay. Now, coming to the legal part. Let us say that Mohan is manager of company Z, and he knows that company will acquire some other company, and he knows that when it happens, the stock prices will go up. So what Mohan does is, he buys significant amount of shares and then informs SEBI that he has bought the shares of the company. If he does that, then it would be considered as legal insider trading. Alright. Now, what will SEBI do with this information and how is it different? What happens is, in the NSE website and also in BSE website, they list who are the ones who have bought the shares, what is the quantity, who are the ones who have sold the shares and what is the quantity. So when Mohan reports to SEBI that he has bought some amount of shares, then SEBI will ask the exchange to list it out. Exchange will list Mohan and the number of shares that he has bought in their website, which will be available to the public. The public can use this information while deciding to invest in the company. Okay. So if Mohan informs SEBI after buying or selling, then it would be considered legal. Okay. Next is ESOP, Employees Stock Ownership Plan. Alright. So what ESOP is some companies have certain benefits. That is, they give shares of the same company to the employees who work in their company. They give the shares at lesser cost than the market price or sometimes free. Alright. So if shares are given under such scheme, then it would fall under the category of Employee Stock Ownership Plan, ESOP. Now let us say that Ravi works at a company X and he has some number of shares under ESOP. Alright. Now this is given to him by the company. Now he sells the shares and informs SEBI. Alright. Now let us say that there is no news and he doesn't have any information also about the company secrets. He just sells the shares that he had got from the company and then informs SEBI. If that is the case, then it would be considered as legal insider trading. Whereas if Ravi sells the shares and keeps quiet, meaning he doesn't inform SEBI, then it would be considered as illegal insider trading. Okay. Now, the major difference between legal and illegal trading is that in illegal trading, the purpose is to gain profit at the cost of company. Okay. Whereas in legal insider trading, the objective is personal. Alright, for personal profit, and it doesn't use any unpublished price sensitive information. We call it as UPSI. Alright. So this is the difference between legal and illegal insider trading. Okay. Now, if anyone reports this insider trading and it comes out to the public, then it would be a very negative thing for the company. Alright. the FIIs would not be interested to invest in the company, and also the stock price will take a major hit if this happens. Alright, there have been many cases of insider trading which have been reported and where the stock prices have been impacted. Alright, yes, so this is about insider trading. Now let's move ahead to the next topic, which is a completely different topic called as Muhurat trading. The concept of Muhurat trading first began in 1957 on BSE, but right now it is being done both in BSE and NSE. Okay. Now this Muhurat trading is an age-long tradition of trading on the night of Deepavali or Diwali. The stock exchanges will be open for 1 hour in the night or in the evening of Deepavali. This is because Deepavali is considered to be auspicious day of the year, and so people believe that if they invest their money or if they trade during this time, then they will be having a good luck during the entire year. Okay, so what people do is they perform Lakshmi Puja, correct, in the evening, and during this time they trade, and some also buy stocks for their children in terms of long term perspective, which are held for long term and are sometimes never sold. Okay, during this Muhurat trading, the market is covered in optimism, and normally it will be bullish rather than bearish. Alright, yes. So this is about Muhurat trading. Even though it is an age-old tradition, you should be careful while investing during this time. It is not for investing for long term, it is just for trading. Alright, yeah, so do your personal research before investing or trading. Okay, yeah, so that's it for this video. I'll see you in the next video. Till then, take care and thank you for watching.